All right, welcome to the weekly meeting, August 19th. We'll start off again with the Oliver Velez joint. You can find this video on YouTube, everything you need to day trade. I'm going to fast forward this to like the 22-minute mark when he's discussing the downside of day trading.
Ever skipped an opportunity to put the cons in your face? Because I think the cons, understanding them, is actually more important than recognizing and understanding the pros. Let's get to the cons. Con number one is the most important con of all. The odds are against you. Traders, listen to me carefully. The odds are against you. Traders, listen to me carefully. The odds are against you. One more time. Listen to me carefully. You will never be able to fault me for failing to tell you this, for failing to put it in your face, for failing to shout it as loud as I possibly can. The odds are against you. Why? Because there's a 92% failure rate in the short-term oriented trading space. That's right. 92% of every one of you listening here will fail. 92% won't make it. No matter what you do, no matter how hard you work at it, no matter what your intentions are, 92% failure rate. And not me, not any firm in the United States, not any firm internationally, not any expert, not any mentor, not any trader, not any trainer, not any mentor can change this statistical fact. It is etched in stone. 92% failure rate. Now breathe that in, traders. I need you to understand this. I need you to understand what you're up against, because you ultimately, at the end of the day, are going to have to answer this question. This one very, very important question, traders. You're going to have to answer this. Do you understand? You're going to have to answer this. Do I have what it takes to be the 8%? Guys, this is a simple game, but it's not easy. There is a huge difference between simplicity and easy. It's simple. Markets go up, markets go down, sometimes they go sideways. Three possibilities: up, down, sideways, up, down, sideways. That's a simple rudimentary mechanism. But I am the last person on planet Earth that will tell you that this activity called day trading in particular is easy. It's not easy. In fact, it's one of the most challenging activities you as a human being will ever pick up. Do you know why? Because in order for there to even be a hope for mastering the market, you have to first master yourself. And let's face it, how many people actually master themselves in this world? How many people actually reach a point where they do what they say they're going to do? How many people really keep their promises to their kids, their wives, their husbands, their community at large, their societies, their personal God? Very few people reach the point in their life in anything where they have accumulated or accomplished self-mastery. But the only way to have any chance at success at this is to first master yourself. You can't take an unmastered you into the market and think that there's going to be success in the market. You can't take an undisciplined you and go find success. You can't take an untrained you and go into the market with your untrained self and think that you and your untrained state is going to pull money out of the markets. Won't happen. You can't be an ill-informed individual and take your ill-informed self into the market and pull money out of the markets. You can't take your unmastered self. You can't take your undisciplined self. You can't take your untrained self. You can't take your uneducated self. You can't take your uninformed self. You can't take who you are right now without changing yourself first. You can't take who you are right now and take who you are right now in the market and expect the market to give you money. So what must happen? You must first change. You must first go through a metamorphosis. You must first become educated. You must first become discipline. Discipline is not something you're born with. It's something you work on, like your muscles. You got to hit this thing up every couple of days, every day of the week, if you will, to build that muscle, to build that, to build that capability. You have to work on becoming disciplined. You have to work on becoming educated. You have to work on becoming experienced. This work happens first. And it is this work that transforms who you are. Then you take the transformed you into the market, and it is that transformed you that starts producing progress. But if you think that you can stay who you are without putting work into creating the change you need in yourself, if you think that there's just, I take this 2-day course and I go into the market, 2 days is not enough to change who you are. Take this 2-day course, go into the market, open up an account, and I should become rich in the next few weeks, then you should really find another freaking planet to work on, because you are living somewhere in outer space, not here on planet Earth. I don't know about any other planets, but that doesn't work here, not on planet Earth. I have yet to do intergalactic travel. I'm waiting for Elon Musk or somebody to make that possible. But until then, I only know what the situation here is on planet Earth. This industry has a 92% failure rate, largely because people don't want to go through what it takes to become someone different first. They want to stay who they are and take who they are into the market and take money out of the market. It will never happen. My mother used to say, Oliver, never say never. Oh, never say never, Oliver. Well, I'm telling you, Mom, sorry, never. Let me say it again. Never. All right, guys. I know I'm silly, but it's a point worth. I'm telling you, it's a point worth belaboring. All right? 92% failure rate. Get it locked into your head. Most people know nothing about financial markets. They think they do. Oh, well, the market goes up and the market goes down, right, Oliver? That's it? Yeah, that's pretty. Most people know nothing about financial markets. That's a con. Here's another big one, guys. Success comes after experience, and experience takes time, years. You can't be an experienced trader in 2 days. You can't be an experienced trader in 2 weeks. You can't be an experienced trader in 2 months. Becoming experienced takes time. You can't cheat experience. All right? Anything good that happens before you are experienced is called luck, traders. Only what happens after experience can you claim as yours. Listen to me carefully. You can't become successful before you become experienced. Get this in your head, people. You cannot experience true, real success before you become experienced. True, real success comes after you become experienced. And what's required to become experienced? Time. This is what people do not want to put into this. They want a microwave. They want a microwave results. Can I have my gourmet meal in 15 seconds? No, you cannot. This is the number one reason why there are so many scams in this industry, because these scammers, right, which even I, believe it or not, have been accused of. Are you kidding me? Putting this truth in your face? How? But this is the number one reason that scammers in this industry get away with their scams because they sell you on the idea that anyone can do this. They do not tell you that 92% of the people are going to fail. They do not tell you that this is difficult. They do not tell you that you're going to fail first until you become experienced. They do not tell you that experience takes time. They do not tell you that success happens after experience. And before your experience, you're going to be a loser. The reason why, how many people are in this room? Check for, there's 427 people in this room instead of 40,000 people in this room. Do you know why? Do you know why there's only 400 people here instead of 40,000 people? Because I tell you this truth, 92% of you are not going to make it. There's only 400 people here because I tell you that success comes after experience. There's only 400 people here because I tell you that experience takes time. There's only 400 people here because I tell you what's real in this industry. If I went at 40,000 people in this room, I would constantly preach from every podium I can that everyone can do this, that you're all going to be successful, that it doesn't take time. Just follow these 3 things and get rich. I would have 40,000 people in this room. But I will never do that. You learn how to win in this business by first learning how to lose. Can I repeat that for you? You learn how to win by first learning how to lose. What does that mean, traders? You're going to lose first. What does that mean? You are going to become an expert loser before you see a single dollar, before you get winning trades consistently, before you call yourself a success, before you start to support yourself with this activity. You are going to be one of the greatest losing traders you have ever seen. You're going to become an expert at losing. You're going to become so intimate with losing, you're going to feel like this is just your natural state. You lose your way to success in this business. There is no way to win first because winning doesn't come before your experience. Experience comes after you have lost tens of thousands of times. Guys, listen to me carefully. I get very, very emotional about this, and I apologize. It's just the way it is. It's just me. I get emotional about this because I need all of you to understand this. There is a direct link between how much you lose first and how successful you are later. And isn't it ironic that what all of you are trying to do is you're trying not to lose the very thing that you need to do. The very thing that you need to do now is to lose as much as you possibly can to get the losses out of the way now. You don't want the losses in the future. Just get the losses out of the way. Become so intimate with losing. Become so intimate with every possible error, every possible mistake. Know it like the back of your hand so that at some point, the market can no longer fool you. The market can no longer trick you. The market can no longer surprise you. You've been there. You've done that. You know every possible mistake that can be made. You know every possible error, every booby trap, every dead end. The market loses its ability to punch you without you seeing the punch coming. How do you get to that state? You become an expert loser. Why is this a con? It's a con because most people don't have enough money to get through the losing period that happens first. First of all, they enter the game with this Mickey Mouse Disney idea that I'm supposed to win from day one. This is not Disney World. I'm sorry. This is not a Disney movie. This is real life. It is impossible for you to win until you become experienced. And it is impossible to become experienced until after you have become the #1 expert at what? Losing. How does a baby learn to walk? By running first? Wait, I'm going to learn to walk by sprinting first in the Olympics. Then I'll learn to walk later. No, a baby learns to walk by first trying to stand and falling. Standing, falling. Trying to stand, fall, 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 fall less. fall less. Stable, don't fall off and take a step, fall. Take a step, fall. Take a step, fall. Take 2 steps, fall. Take 2 steps, fall. Take 3 steps, falling, 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 until the baby becomes so intimate with falling and all the reasons for falling that he naturally starts to avoid the reasons, but not before becoming intimate with every possible way to fall. Doctors tell us that parents who overly protect their children from falling wind up with clumsy kids, zero athletic ability, because they weren't allowed to fall enough. You lose your way to success at this business. Why is this a con? It's a con for 2 reasons. Number one, most people start off with a tiny bit of capital, and then they lose it because the first period has to be lost. The first period of a baby learning to walk has to be falling. You're always bad at something in the beginning. Always. First time you pick up a basketball, you're horrible. First time you put a golf club in your hands, you're really horrible. My golfers out there know that. The first time you try to kick a soccer ball and control it, you're horrible. The first time you try to walk, you're horrible. The first time you try to talk, you're terrible at it. You are bad at everything you start off. But somehow, when it comes to this activity called day trading, that all of your common sense leaves your God-given head for some reason. And for some reason, this is the only activity that life is supposed to be different. No, I'm supposed to be good at this from day one, right? Really? You don't apply that common sense measure to anything else in life. But when it comes to this, you expect to be good right away. You expect not to fall. You expect not to lose. You expect to make the ball in the basket every single time. The first time you pick up a basketball, really? How can that be? Why is this supposed to be the exception to you? You're going to be bad at this. You're going to lose your money first. Absolutely. You're going to fall first. It's just the way life is. Again, I don't know about life on other planets. We're still waiting. But life here, you lose first in everything. In everything. Do you understand what I'm saying? Are you picking up what I'm laying down? Am I talking too much? I am frustrated at the level of naivete, and I am frustrated at I'm frustrated at the lack of common sense when it comes to my industry. I'm not here to sell you on some pipe dream. I'm here to speak some much needed reality to you. This is not easy. But I, for one, am glad it's not easy. I don't want to be a master at something that's easy. Oh, I'm a master. Did you know I'm a master at walking? Oliver, what's the big deal? Everybody can walk for the most part. I don't want to be a master at something that everyone else in the world can be a master at. I want to be a master at something so difficult that most people say, oh my God, really? How did you do that? Can you talk to me? Can I take you out to dinner? You want this to be hard. You want it to be difficult. You want it to be challenging. You want to be special. You want to be the minority. Who wants to be the majority? You want it to be difficult, but at the same time, don't be naive and think that it's going to be easy. It is not going to be easy. It is not. But at the same time, be glad it's not easy. Because if you happen to make it, oh my God, you are truly special. You're the 8% and not the 92%. And that should be your motivation. That should be your goal. I want to be the 8%, and I will work at being the 8%. I will put the work in. I will put the time in. I will become experienced. I understand that I'm going to lose first. I understand that inside of every single loss is the seed of a future win. I understand this. Losing comes first, Oliver. I understand this, and I will work on perfecting my losing until I lose less, and until the vast majority of those losses go away. You have to be willing to do that kind of work and have that kind of determination at this. Otherwise, you're wasting your time, you're wasting your money, and you're proving every naysayer right in my industry. You know what the naysayers say? That this is not for you, that this is stupid, that this is gambling. They call my industry a fake, a scam, and it's not. But you, many of you, make them right. You turn this game, this professional game, into a casino because you're gambling and you're not trading. You play this game like it's a Disney movie, like you can all of a sudden, somebody can wave a wand and you're all of a sudden a successful trader because you took a 2-day course from somebody. What? A 2-day Disney wand to become successful. That the real world doesn't operate like that, traders. I'm sorry if I get so animated, but incredible. So like I was saying, I think that getting guys, I think that getting some of these things out of the way, we're tackling some of the major misconceptions here.
All righty. I think that's as far as we need to go. I think hopefully everybody gets the point here, right? I think from here he goes into talking about how your family won't understand. It'll just be you versus you. With that being said, who's still struggling with trading? Let's be honest.
I am.
Who said I am? Kizzy?
Kimberly. Oh, sorry, Keith.
Oh my God. Okay. So what are you struggling with?
You know, I can't pinpoint what it is. And I know I should know like what it is. I know the steps I gotta take. I think it's my discipline.
Okay. Do you know how to work on your discipline?
Not really.
Okay. Well, I mean, so this highlights one of the issues when it comes to trading. So every other job that we've held in our lives, all the rules are already in place, right? We know we can't come in and cuss out our supervisor. We might have a dress code. We might have strict reporting hours. Sometimes we can work from home. All these rules are already there. This is the first job that you have that has absolutely no rules. And we have to create every rule. So the only way that you create rules is by putting them in place and then punishing yourself when you violate those rules. I mean, it's back to your childhood, right? Like when your parents told you to do something, you had to do it or you faced the consequences. I know, you younger generation kids didn't have many rules and the consequences weren't as severe. I got it. But the only way that you get results is that you set rules and you have consequences. And the more severe you make your consequences, whether it's eating chicken breast every meal, cold or whatever, maybe that's it. Maybe you love candy or maybe you love going to the movies on Friday and you just cut that out. Maybe you love sex. Maybe you love shopping. Maybe you love cars, whatever your vice is. Like you guys know yourselves. You have to be willing to take away whatever you love when you break the rules. That's how it works. And if you're going to sit here and tell me, well, Todd, I'm not giving this up, then I'll tell you that's cool. You're not getting trading. I mean, you won't get it until you're able to give it up. Trading is one of those things that needs to be the priority. And if it isn't the priority, your time, your learning curve is just going to extend, right? So it's cool if you don't want to give up whatever you love. Just expect a longer period of time that it's going to take you to turn that corner, because it's like learning a language. If I don't want to sacrifice the time to learn the language, I will eventually pick it up. You might learn it in 6 months, and it might take me 6 years. And at the end of the day, it doesn't really matter, right? Most of us, we're going to be working until we're 60 or 70 anyway, maybe longer than that with the economy jacked up. But most of us planned on working all of our lives anyway. So it might not be as big of a deal to Selena to learn how to trade, because maybe she has a good job that pays her a lot of money. So whether she learns today, 6 years from now, who cares? But other people who might be in different situations might be willing to sacrifice something that they love in order to prioritize learning the skill of trading, right? So if you have a discipline issue and you recognize the discipline issue, then punish yourself. I mean, obviously, you're not going to pull a belt out and give yourself a whipping, but you can punish yourself in different ways. Whatever you know that you like to do, take it away. So take it away. I mean, that's just the bottom line, and you'll start getting your results. And if that doesn't work, take something else away. That doesn't work, take something else away. And eventually you will change. And that's how the Army does it. They break you down first. They take away your sleep. They get you excited. They play on your fear to break you down. Once they break you down, you have a set time to get up. You have to look a certain way. You have to wear certain clothes. You have to say the same thing. You eat fast. You do everything fast. You work out. They give you a strict regimen. It's building discipline. It's the same thing. You show up, whether you're sick or not, you show up. Whether you're tired or not, you show up. Whether you've eaten or not, you show up. You do the same things day in and day out. And pretty soon it's just second nature. Not saying that you like it. I mean, a lot of times it was cold outside. I didn't want to show up, but I had to show up. It's just the way that it works. So that's how you fix or you work on your discipline. It's a process. For those of you who are saying psychology, what are you doing to work on your trading psychology? Have you dropped down your lot sizes, right? Everybody has a happy medium. Maybe you cannot trade 1%. Maybe you have to trade a fraction of that. Maybe you need to go to a 0.1 lot size and trade every trade 0.01. Because nobody cares about that little bit of money. I don't care who you are. You're not going to lose sleep over that. And on the flip side, when it goes 100 pips and you won your $10, you're not going to get excited about that either. But that's how you work on your psychology. And then when you see that these trades are coming through, eventually you're going to say, okay, I'm going to raise it to a 0.02 and you're going to make $20. And that's not going to move the needle. And then you just keep incrementally raising that lot size. That's how you work on your psychology. And once you see something is going to happen, I mean, pretty much all the time or more than it doesn't happen, you will be comfortable with, trading and comfortable with those risks. That's how you work on your trading psychology. You also can listen to videos, watch YouTube videos. But if you're doing nothing, then, you're wasting time basically. And eventually, hopefully everybody will come around. But if you're doing no work and you're expecting results, I need you to go ahead and Google the definition of insanity, because it's probably going to have your photo. Okay. For those, some people will come back and look at videos, or they'll look at a video the first time, they'll get something out of it or very little out of it. Then they'll come back and watch the video again. They'll get a little bit more. And they can watch a video over and over. And eventually something will click, right? Maybe it was a word that they missed in the video. And due to them gaining experience over time, they can come back and then that word is said in the video and they God, I get it. I was watching a Trading Nut podcast this week, and it was a female trader on there. And she was saying that she struggled until she watched an ICT video. She said she had seen the video 30 times. And she watched it and all of a sudden it just clicked. And the name of that video was Liquidity Purge and Revert. And the reason why I bring this up is because, like we've said before, or I know I've said it 1,000 times before, if you go to that daily chart and you look at the wicks, right? So if this was a daily chart, well, it doesn't even matter the time frame. Let's just talk about what happened, right? If you're a retail trader, support and resistance, this is going to be a level of support right here, right? And price comes and is pushing down. This is a level of support. Everybody's going long right here, right? You go long, the market pushes up and everybody's happy. Then all of a sudden, they pull that market down and they take everybody who was long right here. All these positions, they take them out. But the market still goes where it's going. This is a liquidity purge and revert. Now, we call it a stop run, or whatever. This can be on the daily chart. The time frame doesn't matter because the market is fractal. The other day, this stood out to me because the other day we were talking, maybe it was the last Saturday's call, maybe it was Tuesday's call, I don't remember, but I was joking with OG because I was telling somebody that, hey man, you get in when you see everybody else get stopped out. This is an example of what I was talking about. You see all these guys over here that got stopped out. The market pushes back up. You get in the market. When you see the stop run and that wick candle, this is when you enter your long because you already know what time it is. And your experience, right? Just like Oliver Vallejo said, your experience tells you that, man, they just got rid of these folks. So it must really be time to get into the trade. So if you fibbed this wick of this candle, this pullback probably would have gave you a 50% or a discounted entry, right? You could have got in and got straight to the profit. And this is what we mean. And I know I've seen OG drop that video with that crazy looking white dude in there, just telling that person on the news, I get in when everybody gets stopped out. All right. What's that video, OG?
Dr. Paul. I'll post it again. It's my bad. It's in the Laos review.
Yeah. And he says it like as a matter of fact. Like this is what this is a lot of people, this is their entry signal. Like we wait on order blocks and we wait on all this stuff. But for a lot of old school traders, that's it. And that's called a liquidity purge and revert. So all we're trying to do in the group is be a group of traders who have an understanding of the market, right? Now, we all have different trading styles. We all have different entry criteria, all that. But we want to basically speak the same language, right? We all understand what happened when they took the liquidity out of the bottom of the market. We knew it was going high, right? We could have targeted these highs right here. On a higher time frame, maybe you did have a level up here. But if you're just looking at this 4-hour chart and this got taken out, beyond a shadow of a doubt that high, right? This high right here is your target, right? That's $3.19. And this is an oil chart, but it doesn't matter what we're trading. This is the same thing. So if you had jumped in this trade, you could have went ham. You could have went absolutely ham to this high right here. And maybe if you're looking to the left, maybe you would have had another area. But don't get greedy. Target this high, right? And take your money right here. That's $3.19. I'm not even going to tell you how much money you can make with it. I shared a video with a couple of people of this 19-year-old kid that was trading oil, and in a $6 move, he took his $200 account to 190K. So I got it. He's over leveraging, but leverage is there for a reason. And if you understand how to use it, you can make that 190K. I'm not suggesting to anyone that they need to ramp up their leverage like that. But that guy recognized a move and he took advantage of it. Of course, there's some luck involved, right? We're not going to all be sitting at the computer when these moves happen. But my point is, if we have a baseline understanding, then we can be successful in this thing that we call trading, right? Now, obviously, we have to work on turning it off. We have to have an off switch. We have to have an understanding of when we're going to trade, and we have to have some basic rules, right? Less is better. Less is better. That means if you're trading less, this is one move. Now, if you got 30 positions in this one move, it's still one move. So that's considered as one move. You might have 30 entries in that move. But once the move is over, you're done. So you have to create these rules for yourself, and you have to be able to follow these rules. So now, I want to kind of discuss what happens in the market. And it kind of dawned on me when I was watching that video, and this is why I even wanted to have this conversation. Many people struggle because they don't know the direction. And one of the things that I'm most proud of this group is we understand the direction, right? For the most part, I want to say 99% of the time, we have the direction correct. And if we think back to the Market Maker series videos, and I don't think that's an ICT video. I'm not talking about ICT's Market Maker series. I'm talking about there's a Market Maker series videos out there where, basically they're saying you got accumulation, you got the markup, and then from the markup you have another consolidation, and then you have the push down, right? Everybody kind of has these videos, these Market Maker series, and they explain what we're expecting from the market, right? And at the end of the day, if this is a true depiction on what we can expect, then in this group, I would like to submit to you that we have a great understanding of how to trade this, right? Because all we trade, what we believe in, right? I can show you this Market Maker series right here, right in these candles. We believe in an order block, right? Here's your consolidation. Now, this is a 4-hour chart, but if you drop down to the 5-minute, you're going to see consolidation. You're going to see the market markup. That's the markup. That's the up move right here. You get more consolidation. Then you get the down move, the pullback, this pullback into your order block or your zone. So if you think about this, it doesn't matter what time frame, guys. This can be on the 2-week, 2-month, 1 week, 1 minute. If you know and you highlight this area, this order block, the market leaves, it's going to come back to the imbalance. It's going to come back to that imbalance. So you, as a trader, have to decide, hey, am I going to sell it back down to this imbalance, or am I going to just wait for it to hit this imbalance and buy it from that point and target, at least the highest point of that move? So you would have targeted this level right here. And boom, you're going to get it 99% of the time. That's all that we do in this group. Now, of course, we catch 300 and 400 pip moves, but we're out here looking at 2-week charts, 2-month charts, 6-month charts. So we get the long moves, the elongated moves. So this very concept, right, whether it happens the next candle or 3 candles later, that's what we're waiting for. We're just waiting for the push up and the pullback, right? So on this 4-hour chart, we get the push up, we get the pullback to tap in. Maybe on the daily chart, this whole area, right? Maybe this whole area is an order block. And this right here is to tap into that order block. And then you get to move up. In fact, let's just look at the daily chart. Dang, let me go back to the 4 hour because I should have kind of marked it up. What day is this? August 23rd. August 2nd. Okay, this is August 2nd. This is that price. So you had a daily order block, right? And it looks like it tapped in the next day. The market pushed up, but it came right back, tapped in again. This is the reach below that was on that 4-hour chart before the market pushed higher. But this daily chart, if you have been looking at this on a daily, you see the order block, you might have just been waiting the next day for the push down. So you could have caught the buy. And on this daily chart, maybe you're targeting this imbalance right here, right? You got an order block, maybe you're targeting this imbalance or this order block. Maybe you mark this order block and your take profit is going to be at that 81.87. So it would have tapped right in. Price would have took you right up there. But if you're trading this, let's say if you're actively trading this would have taken 2 days. But you never went into drawdown because you have an understanding of this very thing right here, this very market maker series or this market maker structure, right? The market consolidated in this red candle, right? This base right here consolidated. We got the breakout, the pullback. The market broke out way up here. It pulled back right into an imbalance on the lower time frames. There was an imbalance in here. The market pulled back to it. You take the buy. You could target the top of this candle. You could target this imbalance, however you wanted to do it. That's at the root. That's a very rudimentary breakdown of what we do in this group every week. So it doesn't matter if you're trading the 4-hour, the 15-minute, the 5-minute, the daily, the week, the 2-week, right? You have a good understanding of what's going on. And I'm glad that I chose this chart. Let me delete this mess because it brings me to a good point, all right? If I look at this weekly chart on oil, right? The oil gave us a bearish order block, all right? In the grand scheme of things, we talked about Wyckoff last week. We see this move, right? Oil came off of there's a super high right here. The super high like a $1.30, right? $130. That was in March 2022. The market pushed down. It gave you a 78% pullback, and then it dropped, right? When we dropped, we broke a lot of these swing lows coming down, right? The market rounds out. You can see the Wyckoff playing out, probably for all intents and purposes. This right here was the bottom of the market. Now you get the manipulation of the lows, right? They're just taking people out. If you remember the Wyckoff video, it's going to push down. It's going to break up. You're going to show your sign of strength, right? You're going to push lower. Here's your spring. We're basically we're playing with these lows. We take these lows out. The market push up, shows a sign of strength, takes this low out. This is probably the spring. The market pushes up, it breaks this high now, right? It's telling you it's ready to go. It broke this high. So now we can fib from here to here, expect the pullback into an imbalance for price to go back up here. Why is it going up here, Todd? Well, if you see that push down on the weekly, it left an imbalance. So I can target this imbalance. This is basic understanding of the exact same thing that I drew out, as far as the impulse move or any market maker series that you watch is going to be the same thing. Those consolidation, breakout, return to the scene of the crime to cover this imbalance, right? Then maybe we push down, or then maybe it goes higher. I believe that it hit this imbalance, we'll at least get a reaction from the imbalance. But if you know and you see this, you can trade it. You can trade it with a 0.01. This is it. This is what you wait on as a trader. Now, on a smaller scale, we have the same exact thing that I was just talking about up here. We have it on this bearish order block, right? If you drop down to the lower time frames, all right, you have the market was here, it pushed down, right? It broke these lows. Now the market needs to push up into this order block. Now this chart doesn't look like our Oanda chart, so it's not gonna, the candles aren't gonna be as pretty. All right, but if you just keep dropping down, you will see the imbalance in these candles, right? And you'll see where price needs to push into the imbalance before it breaks down and pushes down, right? Now, again, these charts aren't going to be as pretty as the ones we're used to looking at, but it's the same concept, guys. You get, this is that 4-hour order block that we see. This is price pushing back into the order block to fill this imbalance. It could go up here and wick these relative equal highs, right? It doesn't matter. The point is you're expecting this thing to push down, right? Now I have my position set up here because I must have saw something, maybe an imbalance over here that I felt like it needed to hit. But my point is, it doesn't matter. Yeah, there's another imbalance over here in these candles, but it doesn't matter if price comes up here or not in the long run, right? You can see another imbalance up here, but it doesn't matter in the long run if price goes to where I think it's going to go, right? What matters for me is once it starts to sell, I can get into the sell, and I can base my entry off of a change of character on whatever level that I deem worthy. You know what I'm saying? So if I want to wait for a 1-hour change of character, that's cool. If I want to wait for a 15-minute change of character, that's cool. But you have to live with your results. So here on this 1-hour chart, maybe price taps this order block, right? There's 2 back-to-back order blocks. Maybe it taps either one of those order blocks and it pushes down and gives me a change of character. I'm okay with that. You may wait for a 4-hour move, right? Now, you have to understand that if you wait on the 4-hour move, you're going to catch less of the trade. If you take the 15-minute move, you're going to get more of the trade. Now, the risk associated with the 15-minute move are a lot higher than the risk associated with the 4-hour move. But we have these, I mean, you have to have that understanding as a trader, and you deal with those risks. Again, you can use a 0.01 lot size and take advantage of this move. I'm just, I would sell this move into the buy, right? Because on the weekly chart, I already know, we just talked about this needs to push down. Here's the imbalance that I see. it needs to push down and buy up, right? Buy up to cover this imbalance. It's a basic understanding of how the market moves. I don't know what time it's going to do it. Maybe it does it on London session. Maybe it does it on US session. It's probably going to be one or the other because it's US oil. Do you guys have any questions? Anything to add? I wanted to break it down like this because this is a very rudimentary version of my understanding of the market, and hopefully yours too, if you've been sitting in these sessions for long enough, right? I didn't make this up. These are concepts that I've taken from mainly ICT, right? But other smart money educators trade the same or similar concepts, right? Now, it can be a lot of back and forth because you have zones in here. It can be back and forth, but I'm interested in the overall move. And I know it's not going to happen overnight. If you look at this, it took 1, 2, 3, 4, 5, 15, 20 weeks, 30 weeks maybe for this to push down. You don't have to hold the trade for all that time. You might want to hold it for a week. You might want to hold it for 4 hours. You might want to hold it for 8 hours. But my point is, if you have an understanding that the market is pushing up from $72 a barrel to $115 a barrel, you'll have a lot of opportunity to go catch longs during that period of time. You guys have any questions? Does everybody have the same understanding? Does everybody see the market the same?
I see it. Can you walk me through where you would put your hedges, like for each trade? And if they got triggered, what you would do?
Okay, so let's talk about this short, because the short to me is probably the one that's the most risky for me.
Mm-hmm.
Okay, so where I put this position really should be the 50% of this order block, right? And this is kind of a rudimentary entry, but I would put my buy stop at the top of this wick right here. That would be my hedge. And if it came up and dealt with this imbalance, I would be cool with it, And once it rejected this area and started pushing down, I would cut my hedge off. I would start cutting it off. And my goal would be to have my hedge completely cut by the time it gets to my original entry.
So are you like, how are you dividing up your lot sizes to cut every time?
Well, it depends on what my original lot size is. So if my original lot size on this oil trade is a 0.4, right? Then my hedge would be a 0.4 on the buy, and maybe I would cut 0.1 off, every so often. But for me, it depends on what structure it gives me on the way up and then on the way down. Because if it breaks the level of structure, I understand how to go and look, okay, where is the imbalance? Once it pulls back up into that imbalance, then I'll cut a fraction of that hedge off because I'm expecting it to push down. That makes sense?
Yeah, it does. Okay, so you're basically trying to like cut your hedge before it goes back to the original entry
Yes.
for where you sell.
Yes, because I'm sure that it's selling down. I'm selling down to buy up. What I'm unsure about is how high up it's going to go before it sells. Now, it can't go too high, right? Because this is the 4-hour zone, right? If you look at this zone right here is your 4-hour zone. So if it's going to respect this zone, it shouldn't pass my area. This is your 4-hour zone. The imbalance is here. That's why I want to enter down here. It might not make it to that zone, but I'm cool with being in drawdown if it pushes into the zone. I'm more concerned with getting in the trade, right? So this is where I'm going to enter the trade because I want to make sure I get, because if it just feels this imbalance halfway and drops, I would be pissed that I didn't get in the trade. Other people are going to say, I'm not entering that trade unless it hits this zone. And that's cool. You know, that's it depends on your trading style, right?
So what happens if, say, hypothetically, you completely missed exiting your hedge before it got back to that entry and it starts running into your sell? What would you do? Would you hold it until it buys?
I wouldn't. I would just cut it off. You know, you're only my goal for this trade, this sell down, it has nothing to do with making money. It has everything to do with giving me grace for this buy entry, right? The sell down is a precursor to the crown jewel. The crown jewel for me is this buy. So this sell is just building equity. So when I take my position in this buy, I can eat. I don't care what I make as far as the sell. I just want to have some cushion for my position in this buy because in my opinion, if I do very well on this sell, then I can load the family van up for this buy, right? But let's say my hedge eats into this sell, then I'll take a little less position on the buy. It's still going to be pretty good because, I mean, a $10 gold move is I mean, a $10 oil move is pretty powerful. You're going to make a pretty penny, right? Even on a 0.01 lot size, you're probably going to make $30. So when this turns around, now you have cushion to buy, right? So you can have a bigger lot size, right? Or you can have a bigger stop loss. Whatever, however you want to trade, you'll have the freedom to wait, and you don't have to feel as if you're boxed in. So you could have an entry, the same lot size right here. And if it pushes further, who cares? Because you're already selling it. Does that make sense?
Yeah. Thank you.
No problem.
Hey, Todd,
Yes, sir.
you know, since I've been here, what, about 2 months, 3 months, probably, I just want to give you your flowers, man, because the way you lock people in, as hard as it is to keep up with what someone else is saying to you, like you have a way of distributing your teaching style, if I want to call it that, mentor style, uh, really fatherly. I'm like more like the crazy uncle. Um, but really appreciate, being able to see someone do that, on a level of a mentor. Because that's what I do. But just to see someone else do it in a way that is so different and very necessary, right? I don't know that people really understand how necessary it is to have someone in a position to be doing exactly what you're doing. So much appreciation on that. I don't want to go too far on a tangent, but what you do, and I got your back always.
Yeah, I appreciate it. I just think that at some point, right? Like we all have the moment where we're like, man, I didn't see it like that before, or I didn't know that. I wish somebody would have said this. So whenever I have a aha moment or something else clicks, I say, well, maybe that's that may be missing. That may be the missing piece for somebody else. It's it's hard, and I hear ICT say it all the time. It's hard to take a buy when you see a bunch of red candles pushing down. It's hard. It's hard to throw that buy in the face of these red candles and have to trust that it's going to turn and burn, right? But when you really think about it, you don't have to trust. You can drop down time frames and maybe you see that chunk on the 15-minute. And maybe that's all you need as far as a vote of confidence to get in this trade for a buy. Now, inevitably, you're going to lose a trade or two. But I mean, we've all lost trades. So hopefully that's not going to deter you from something that you know is going to happen. The reason why I didn't panic on this GC trade is because I understood what that golden cross was, right? And I mean, we had talked about that Oliver Velez and the picture of power and all that. I knew, like without a shadow of a doubt, that that trade was going to go up. Now, I didn't know it was going to take 3 weeks. We don't control the time, but we just, all we can do is get in the trade, don't over leverage, wait for the initial push, then you can gain size. And what I've started to understand, maybe a lot later in my journey than I would have liked to, is that's, you can build size. I mean, this trade over weeks, man, you can build size 4 weeks from now, right? And I think you do a great job of showing that, OG, with your account. Like, don't be scared of those 0.01s or those smaller position sizes, but also don't close them out. I think most people in here close all your trades out on the weekend, right? And I think that's a mistake. Especially if you're in a funded account or an account that you're trading to be funded. If you're in the trade and you're in the blue and your trade still hasn't hit your take profit, then why would you close it?
I don't close mine,
Yeah, you
especially
just
I'm still in trades. I hold mine over the weekend. But I think for if you're trying to, didn't you say last week, if you're trying to take your biweekly paycheck, then you have to have all your closed trades, your trades closed out, or if you're trying
yes,
to take that. But
that's
yeah.
true. But let's think about this for a minute. If you worked at Albertsons, right, or grocery store, whatever your local grocery store is, right, and your payday is every 2 weeks, and Friday is coming up, and they're going to pay you your $600. But they say, hey, Tanisha, if you wait until Tuesday, we'll pay you $3,000. Would you wait or would you take your $600?
Oh yeah, I'll definitely continue to hold until.
So it's the same. This is the same because a prop firm, they're going to pay you your money. Now, on your payout date, if you still have open trades, they're not going to pay you. But if you close those trades 3 days later and hit that payout request button, they're going to pay you. So I'm not going to cut my winning trade because of an arbitrary payday, right? And hopefully everybody understands that, as you're trading. You don't have to close out just because it's payday. You can hold that trade, because it hasn't hit your TP yet. Now, I'm not suggesting that you hold it for 5 additional weeks, but if your TP is, you feel, a few days away or a day or two away, then I'm not cutting that trade. I'm holding
Yeah,
it.
and a lot of times the 4 hour trades can take 7 to 10 business days. So it's you might as well hold it for one more week, you know.
I agree. Leandra asked, Leandra, are you serious? Or are you just saying that because other people might not know? It doesn't matter. Okay, what do I mean by building size, right, onto your trade? Well, what was the name of that video, Leandra? Okay, I'm not gonna watch the complete video, but this is the exact
Everyone,
video.
it's Adam here, and
I'm gonna show you what I mean by building size.
I think I stopped for a bit. Tech giants did wake up.
All right, so
but you can see this, I guess.
all these dashes are his entries, right? So these first entries are 0-1s. These first two, then you get the 0-2 entries, right? 0-3 entry, 0-5, 0-3, 0-3, 0-3, 0-4, 0-4. As this price is dropping, he's adding size, right? At the end of the day, when you add all these entries up, it'll be one huge lot size, right? But as his margin kept growing, right? This was a $200 account. If you look right now, he's up to 13K. His equity is 13K because you're adding all these positions together. So you can see eventually he put a 0.10. And if you watch this video, the lot sizes end up getting done.
Your work.
Okay, these are, you're going to, it's 1, 2, 3, 4, 5 0.1s, right? Which is a 0.50. $5
You can
lot.
see on the sell size, this is very small trades at 0.03 of a lot. And earlier it was, are you close the trade there?
I would just place another one, close out some trades if I had to get some extra equity in the
So
account.
you're closing out some trades there?
Yeah, so if I had to get a little more equity to place a couple more sells, I would do that. But even like it just jumped from 20 to 40.
Right. So you see up at the top there now, it's 40,000. And you're not even noticing this really at this point?
No, it's really.
I'm trying to stop it so we can see.
Three to four.
Yep.
You sell that, you wait, find out if there was enough margin in the account. Okay, successful. And now it keeps ticking lower, and
then as soon as it would let me place even a bigger.
So okay, now you're up to 6 again, and
yep.
You go on, you narrate it.
Yep, and it kept going.
So he had 4 lots, 6 lots, right? Now, this trade moved $3 right here. Look at these entries. I think this entire sale was a $6 move on oil. He went from 200 to 190K.
It would pull back ever so often, and then I would just place another one, close out some trades if I had to get some extra equity in the account.
So you're closing out some trades there?
Yeah, so if I had to get a little more equity to place a couple more sells, I would do that. But even like it just jumped from 20 to 40.
Right. So you see up at the top there now, it's 40,000. Yeah. And you're not even noticing this really at this point?
No, it's really just kind of worried about that it's going to pull back at this point. And that's why I started to close some of those trades to get the balance up so that I would be able to place more sells in case it did go down.
And now you go back and you try to, this is when you really...
This is when I knew it was going to drop. Just my gut told me.
This is good.
I just want to pause it right there. Just kind of scroll up and down, bring it back, because it shows.
Sweet baby Jesus. 10 lot, 6 lot, 4 lot, 3 lot. This is ridiculous. So anywho, now that, I mean, y'all see what's possible. Everybody in this group sees these same moves every week. Now, you cannot do this on a funded account. I don't want to confuse anybody. This is not possible on a funded account. This is only possible on your personal account. But all he's doing is adding to his trade constantly as it's moving, right? And I bring this up because all of us catch 200 pip moves every week, most of the time. Most of the time we catch the 200 pip move. Who has not caught the 200 pip move? Seriously. Barbara, have you caught a 200 pip move?
Did you say Barbara?
Yes.
Yes.
Marv, have you caught a 200 pip move?
Yeah, I have.
Did you say who hasn't or who has?
Yeah, who has not?
Oh,
I have.
There's a hand. Whose hand? Who has not?
I haven't.
And you're the person that's
This is why I didn't want to raise my hand, but okay.
listen. I mean, you know, I like to beat you up every now and then, but this is what I'm saying, guys.
He has caught one.
Yes, she has. You might not have participated in it, but you did catch it. You know, it's
$10, she probably got 1,000 pip move.
On that US 30 trade that we called her.
Whatever she be trading, she probably catch more multiple 100 pip moves than anybody in the group. She just doesn't leverage up.
So listen, hey, if you haven't caught a 200 pip move, or you don't know and you can't recognize one, ask somebody. Ask one of these people who are catching it. We talk about them every week. Every week we discuss them and we point them out. So if you're not catching them or you're not involved in them, I have to wonder why, seriously, because we call them out every week. You know, maybe last week, you know, was it last week? Not this past week, the week before that, I called out a bad move. So I understand if you did not catch a 200 pip move that week, you probably caught it in the reverse. It went reversed more than 200 pips.
I've done that a million times.
Yeah. So, but now we shouldn't be. We should be catching the right direction every time now, because we understand the direction of the market, and we're catching them on the higher time frames. So I'm not suggesting to anybody that you have to do what this guy did. But I do want you to understand the possibilities that are right here every week, right? Now, this is a commodity, oil, gold, the indices. They're going to move and pay you differently. But you could take a GN trade and go from 200 to 10,000 the same freaking way. The same way on a 4-hour candle. The same way. So just understand the possibilities. Just understand what's really available.
I almost did that with GU, but then it dropped instead of continued up. I was liquidity.
Right. But I mean, now naturally you have to understand your entry and all that stuff, right? But my point is, if you're in a winning trade, you've caught 200 pips, you've seen the opportunity. I'm not showing any charts. I'm just talking about the possibilities, right? The point that I'm trying to make to you is everybody in this group has seen that bearish 4-hour order block before it dropped. We've all seen it. We've pointed it out. We've talked about taking a move. We caught a GN sell for 300 pips one week. We caught several. We've caught several moves like that. AUD CAD, GC. GC is about to do another one, you know. But my point is this: if you've never tested your demo account out, if you've never put these things to the test, I mean, that might be a great time to do it. And it just takes you to take the next step, you know, as far as your understanding or your trust in what we see every week. Because this dude doesn't know a quarter of what you know. This dude, this is a 19-year-old dude that got into an oil sale after after the oil sold. Remember when oil went to zero? Y'all remember that?
When
Those,
was that, during 2020?
yeah, yeah. Y'all remember when oil dropped to zero? It dropped under zero.
No.
I can't believe none of y'all know. What are we doing? What are we doing?
Oh yeah.
Y'all see this?
What?
Y'all don't what are y'all doing, man? So anyway, this is April 2020. That dude traded the next drop. Like he didn't trade that day that it hit zero. That wasn't that day. It was after it came back up. He didn't trade this day. He caught this drop. So imagine if he had caught this drop. He only looked at it because it fell to zero. The possibilities of what we do are endless, right? And it doesn't matter if it takes you 5 years. These same opportunities are going to exist in 5 years, right? The other day, poor Selena. The other day, we called Selena. What time was that? What time was that?
Huh?
What time was that? We called you this
It
day.
was that night. It was Wednesday night.
It was on this drop. Hey,
Mhm.
man, you want to get in the US 30. In fact,
I got in,
this is
sir.
stuff. Oh, you got in, Selena?
I did. I got in US 30 and I got in oil.
And I told you, I said, Selena, even if you use a 0.02, I told you. Now listen, you could have used several 0.02, but the point was you knew without a shadow of a doubt this was dropping. We wasn't even a question of whether it was dropping. So if you had trusted what you saw, and why wouldn't you trust a daily bearish order block as it was pushing up? Why wouldn't you trust this? Anybody? High, lower high, lower high. Why don't you sell this? Why would anybody who sits in this group not sell this? Why would your target not be the bottom at least? Even if you don't believe in all of this move, why wouldn't you sell that daily move to this bottom? Right? Even if you don't, because some people will tell me, well, Todd, I don't trade the 6-month chart. And that's cool. Maybe you don't. Maybe you're not a 6-month chart trader. But when you fib this 6-month, this down move, this red candle that went down, you fib it to this wick right here, and you see that this pulled back to the 88. To not sell this is negligence. I mean, it really should be a jail sentence for you, whoever calls themselves a trader. Even if you just sold it from the 88 back down to the bottom of this candle. But why not sell it to the moving average? We all know that these trades hit the moving average. It's either going to push up and give you a higher high, or it's not. Now, this is a 6-month candle, so maybe you're like, well, Todd, I don't know if it's going to do it or not. Okay, let's go. Let's look at the weekly. When it pushed up and reacted, it gave you a bearish order block. It gave us a bearish order block 2 weeks ago. We talked about this. It taps in the next week. This week, US 30's draws fell off. Why wouldn't we trade this? If price pushes up to this low right here, right? If it goes to tap in, why wouldn't you sell it to this bottom?
That's why I'm put in a bigger position.
Yeah, right. Yeah, I believe it when I see it. I hope you do. But my point is, y'all never have to take any advice from me, right? All I'm asking y'all to do is to open your eyes to what you've seen, right? Since you've been in the group, or, you know, a lot of y'all don't look at these higher time frames. I got it. I got it. No other person has ever shown me higher time frames, right? But every one of the people that I've ever listened to always said to me, hey, the higher time frames are more accurate. They're going to push right through the lower time frames. So if anybody believes any of that garbage, then these higher time frames that drop two bearish, back-to-back bearish order blocks on you probably means that this joker is going to push down. So for you not to be part of that push down, even at a 0.01, that is criminal. It's negligent. I just have some questions for y'all. You know, as trader, are y'all trading the trade? Like, are y'all trading for the endorphins, or trading, you know, to make? I just got to ask, you know, because it's different strokes for different folks. What are we doing? So these are moves. I don't even trade these indices. I don't trade them like that, right? I'll only peek my head in here when there are obvious opportunities, right? Like almost can't miss type opportunities. So I don't bother trading these higher risk stuff because I do so well with regular pairs. But even Ray Charles can see that this is dropping, you know. And then you got some clown. I'm not even gonna call him a clown. What's that dude that's shorting the market now, Sean?
I don't know, some billionaire. I don't know his name.
Yeah. Billionaires don't just throw their money away. I mean, I don't know any that do it. You know, so
But Elon Musk did when he bought Twitter.
well, yeah, he changed it to the X. He threw the X's up, you know what I'm saying? But look, guys, it's these opportunities, they're gonna always be here, right? What I'm trying to implore you guys to do is take advantage of these opportunities. Don't be the person that's always scared. And I say that because, you know, whatever you have to trade, wherever you're willing to lose, right? $50, $100, trade it, right? Use a low lot size so you can see like this is going to happen, right? It doesn't, you don't have to have a perfect entry. When it's all said and done and price is down here, as long as you don't over leverage, anywhere you enter up here is going to be worth a lot of money by the time price is right here. Every 0.01 is going to matter. And that's why I wanted to show you this video and show this dude's lot sizes was 0.01. Then they was 0.02, 0.03, 0.05. Like he just ramped up. And at the end of that trade, you know, hey Selena, yeah, duh. But by the time this trade, say all of his lot sizes, those small lot sizes, was worth something. Now he had to close a lot of them out to keep his equity good. You know, this free margin can't hit too low or they close out all your trades. But even those lot sizes that was in it, now these 0.10s are worth $300. So I'm not suggesting that y'all trade exactly like he did, but what I'm suggesting is you build your position by adding positions to it as it moves in your direction. Yours can be 0.01. You never have to use a higher position than that. But once you start doing that, you'll understand the power that you possess in your hand. Even on this man's 3G phone, it took him 4 hours to make 200 bands. Bruh. Come on, y'all. Does anybody not understand what we're talking about? Squad. Everybody's clear. Everybody's good.
I'm tempted to try this out whenever we get a crash. for a big
Wait,
correction.
listen. Rose,
What?
I'm glad you said that
It's
because
just $200.
well, hold on, Rose. You don't need $200. This dude made that money in a $6 oil move. $6. Now, if you think that this oil move is going to pull back, this is going to be a $10 drop. Then the raise up is going to be a $30 move. You could be half as aggressive as that guy and you can make what he made. Now, you ain't gonna make it in 4 hours, but maybe you make that 190K in 4 months. I mean, it won't be as much as Selena makes in 4 months, but in her job, but it's still 190K. So
Yeah.
for those of you who are saying you're waiting for the crash, smell that coffee, smell that sauce. We're in a crash, bro. You're in a crash. Oil is going to drop $10, and then it's going to rise 30, and the US 30 is crashing. The NASDAQ is crashing. The S&P is crashing. Now's your opportunity. Now. So you don't have to over leverage, but hey, I want to shake everybody. Hey, this is the crash. This is it.
Right.
That's what's happening. So if you are buying the US 30,
We received it.
you might be in trouble. Hey, don't buy it forever. Don't try to hold on to that thing. We're going the other way. We're going down. You know what I'm saying? So we have room. I just want to ensure that everybody understands what's going on, right? I dropped a news article about the Evergreen filing bankruptcy. Now, if y'all remember, back in January, Evergreen was moving the JPYs something serious. So maybe we'll see a drop in the JPYs because Evergreen is the largest real estate company in the world. So I don't know. We'll see. Maybe that'll be a reason for the JPYs to fall off a cliff. But just keep that in mind. As far as order blocks, I like GC. I'm in GC. I've been there. It finally pushed up. I expected to pull back wick to wick. You can go down here. You can fib this weekly candle. Y'all know the drill. Fib the weekly candle. Get your 78. Get your 50. Understand what the discounted zone is. If you take an entry prior to the 78, I would advise that you cover your stop loss covers this area because you got to understand that the 78 is generally where price pulls back to. And this is a zone that's not been tapped, right? So if you're not already in this trade, or maybe you see this wick, right? You see that wick these highs. We can probably expect this trade to fall. Maybe it falls those 100 pips that it gave me. 180 pips, 185 pips. Maybe it falls 185 pips, taps in, and it gets on out of Dodge. But these are options, right? Y'all scared to trade them indices? You can lever up this drop, whatever the case may be. I mean, do what y'all got to do. Use a demo. You don't have to use your personal account. Use a demo. But these moves are available to all of us. If you haven't caught a 200 pip move, here's a 185 pip move for you, right? And then you turn around once it starts buying, you buy it up. You got 200 pips, right? GN, man, GN been giving out some pippage, baby. It's been giving out some pippage. All right, I got GN coming back.
Always has, man.
What's that?
I said it always has. It just breaks your heart sometimes.
Well, yeah, it does. I got GN dropping down here. Now it did push back up into that zone, but it rejected. So we'll have to see. I know this is a bullish order block, but we'll have to see if we go up and come back down. but I like GN to drop. I like GN to come back down. And this is just to the moving averages. Maybe it drops further, but we'll see. Selena, did you have the 2-week OBs on here?
Yeah.
I didn't look. That's why I asked.
I mean, the 2 weeks started last week, so I posted them last week.
Oh, okay, that's why. All right. So this one didn't even act like it was gonna pull back. There's a huge imbalance. So maybe this would just push up, and it may not give us a decent pullback, but maybe it'll push up. And then when is the end of the month? The end of the month is about a week and a half. Maybe it's not
What's
gonna
on the weekly? Did you show the weekly?
Yeah, I just looked at the weekly.
Oh, I'm sorry. Okay.
That month.
Oh, that's gonna be a nice retracement at the end of the month if it continues to buy for the rest of the month.
Yeah, buddy, it's gonna be great. So I'm personally not gonna fool with this one. I know a few people trade this. I see Mark all the time. Mark be riding GN, but that's 800 pips already, 863. So I'm gonna wait for the monthly to give us that pullback. The monthly got to come see this wick for a good price action. I guess it doesn't have to, but I don't see a reason why it wouldn't. You got great price action throughout. Now we get this push. Man, there's your Wyckoff right there. Spring out of here. What else y'all trading? UCAT, Rosebud. Man, that thing is in an order block too.
Yeah, I was looking at this.
I can't hear you. Sound like you're in the tank. The dollar is going to drop this week.
Yeah.
You see how it wicked these relative equal highs?
Uh-huh.
I done seen it too many times, boy.
Look at GA.
Hold on, no. Let's talk about this for a minute. We'll look at GA in a minute. Relative equal highs, wick price closes back below those highs. That's a stop run. ICT talks about this all the time. I would fib, man. I just gotta find these lows, man. These candles ain't even filled in. Probably from this. That means UJ is going to drop. Of course, the evergreen news came out. I just find that quite strange.
Find what strange?
These news events happen, right at these key areas.
Yeah, it's pre-planned.
Yeah, these nefarious operators are making.
After watching Billions, this TV show, I believe it. They be manipulating stuff.
Yeah, without a doubt. Like this is going to drop. And I mean, they're going to probably say, oh, JPYs are dropping because this evergreen went bankrupt. So this is probably going to pull way back down here to 142. You can't make this stuff up, boy. It's opportunities everywhere. I wouldn't be surprised if we get a 300 pip drop on JPY, on UJ. You could at least trade it to the zone, right? And that's 130 pips, 135 pips. but I'm trading if I'm in UJ for the sell, I'm gonna hold mine all 278 because I've seen it. That Dixie chart tells me everything I need to know. This did the same thing. So basically we filled and we hit an order block right here, right? This weekly order block, and we rejected. Interesting. That's the 78 perfectly. That's the 78 you fib, Sean. Wow, what a dumpster fire, UJ. Okay,
It's crazy how this thing been buying for the last 2 weeks.
but listen, from this wick down, back up. This is the 78. It hit the 78 and it rejected. Oh wow. And
remember I told you last week, in fact, that when we was looking at the Dow Jones, I told you it was at the 78, and I got out of it because I didn't have time to wait to see what it was going to do.
Yeah, and that news dropped.
Mm-hmm.
Yeah, I think all this is bull crap, man. Let me do this screen share. August 17th. right on cue.
That's crazy.
So this is what's going to put the risk on out there.
Risk on. You know what you mean? Risk off.
Risk off, yeah. This is huge. So a lot of the hedge funds in the States are going to eat that loss too.
They just need to put in a trade and make it back up.
Well, I mean, they had their money in there. Like a lot of the hedge funds, bought shares in that company.
I know. I'm saying they need to put on a trade.
Or to sell, to sell the JPYs.
Yeah, they know JPYs are going to sell.
Yeah.
I mean, it's incredible that they have the status that they have, yet they don't know this. Like, they don't know the trade. Like, it's weird.
Well, a lot of them don't. A lot of them aren't really traders. They're investors.
Right.
Yeah, it is crazy though. So, wow, I guess that's the
They look at us like we crazy.
exactly.
Like I've talked to a few of them, and then they'll be like, "Oh, you trade? Yeah, you don't trade? Oh no, I did. What?
Yeah, they say it's high risk. That's crazy.
Well, I think when you're trying to trade, a 4-hour or below, sometimes even a daily or a weekly, it is higher risk. But I think the higher up you go in those time frames, it really is no risk. You just put your position in and don't worry about it.
Right, like an investment.
Yep. Mm-hmm.
But it's the best investment you can make. The money that you're trying to make as you're calling yourself an investor, if you knew how to do this, you would do it. And it's like you just never even tapped into it. It's crazy.
Yeah.
Exactly. It's kind of like the US 30 and stuff now. Like the dude that's shorting the market. We can do the same thing.
Yep. That guy, I mean, I gotta think that he knows how to trade. I mean, his timing was fucking impeccable, you know.
Yeah, I guess so. Yeah.
He has to have a trading background. I mean, that was part of the reason why I looked at the 6-month chart, you know, and it was right on the money. I'm like, wow, he has to know something about trading.
And I love how we were having the conversation, right? It's only going to get better. We are on point. So the
Point like
more
you can't
time
even
we
do
get,
that.
the better it get.
Yeah, if you can catch 200 pips every week, most weeks, I mean, it's only a matter of time before you figure out how to make the 200 pips work for you. I mean, theoretically, we could all have 190K weeks. You know what I'm saying?
Right?
Mhm. Anybody have any questions? Selena, you were saying go over something. You wanted to see what something?
I was just asking you to look at GA. It was a God's plan move for this week.
Oh,
Um,
okay, that's right. GA.
I do have a question though,
Why? That's my question. Why?
because I need an answer from you, please.
Yes, that's good enough.
Um, I know you've mentioned it before and we had a Zoom before, but can you briefly say again what risk on, risk off means?
Okay, we'll Google it. This was a beautiful move this week too.
mhm.
I think it needs to go a wee bit higher. I guess I guess it feels that imbalance, huh? Or maybe
Mhm.
maybe on a daily or something.
Yeah, but you got that wick, so I'm like, it's got to be a little bit more imbalance in there that it could, buy up to.
The daily.
Um,
Yeah, the daily is up here.
yeah.
So,
So
I think it needs to go a little bit higher.
yeah. And I was me and Ish was talking last night, and I just wanted to mention something. I know like the last few weeks we haven't really talked about order blocks on the weekly order blocks because we've been focusing on the low-hanging fruit. But I just wanted to mention, like, sometimes when you're trading the order blocks and say the current week, it just does the retracement to the golden zone or the 78, you know, if you see one that did exactly what you thought it was going to do, it retraced to the 78 or whatever, the next week, there's a big possibility that it's going to actually do the move that we were waiting on. So when I go back and look at some of the previous order blocks, there's opportunity there for people who are just, looking at the order blocks. There's also some opportunities that we don't think about as we go into the next week.
I would agree with that.
Excellent point.
And that's why being in the Zoom is important and having the conversation.
Can you say that louder?
Huh?
Can you say that louder?
Oh, you can't hear me?
Hey,
He's being facetious.
It needs emphasis.
Yeah. Don't this I call it the old way of thinking. This is new life, right? Trading is life, life is trading. This is new life, right? You can't do the old stuff no more. The old way of thinking that, oh, if I go to the Zoom meeting, it's gonna mess up my strategy. No, 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 no. That's a lie, right? Because we're having the conversation of what healthy price action looks like. So you can use whatever strategy you want. It ain't gonna work unless price is healthy. Nothing that we talk about is gonna work unless price is healthy. So if one of us is gonna lose, all of us are gonna lose. If you look at it that way. But it's not that. You got to go with what price tells you. Like that way, if we all tracking on that, no matter how you use it, we're all basically looking for the entry in the same location. The one that wins is the one that caught it where they were supposed to catch it. And then It's always the next after the next after the next, right? And you don't have to catch the catbird. You can catch the next entry, and then to the next candle, you can catch that entry. There's plenty of ways to do it. So don't act like you can't be in the Zoom meeting. Do not block your blessing, right? Be in the Zoom meeting. People are stuck to their own perspective, and they can't accept outside perspective. And then the lie is, oh, well, it's going to mess me up. No, that ain't it. It's not. We can't let you tell yourself that, or you're going to continue to pull your hair out. You have to be in on the conversation. And now you got to be accountable because you were there. So if you didn't make the money, what's happening? Don't say it's the group. No, it ain't the group. Be consistent. Everybody's graduation dates are always different. On every little thing you're learning, you have to graduate it, right? So amongst the group, we want to see you have your aha moment. We can tell you know what you're talking about. We can tell when you're not saying what you used to say. See? But we won't know any of that unless you're speaking. And don't hide from it, because your voice has to be heard. There can only be one you in this environment, in this community, and it's necessary. We need you there, right? We're not going to chase you down, but if we're here for a reason. Everybody needs to be heard. Everybody needs to be seen. So just do your part and everything will fall into place. It's going to take time. My profitable year was last year, right? I've been doing this for almost 7 years now. My most profitable year was last year. And it's just getting better and better as we go. And now you have people who have these stories, and now you don't have to go through what we had to go through. So you'll get there quicker. Like with Mark. Mark met me 2 years ago. He just graduated a 100K account. He's on his way. Jerry paid for his daughter's wedding and all kind of stuff that's been going on because they stuck to it, right? And I knew they was gonna make it because they never stopped being active, right? Whatever you're gonna get, you're gonna get. It got to the point for Mark that there's a certain way he liked to trade, and he knew he needed a bigger account to do what he liked to do, right? He had to figure it out. He never got away from what he liked to do, right? But he was around and he's hearing information that's going to help him be a better version of himself. So he still does a lot of the things he does, and he would blow accounts because he goes hard like that. And now his losses started to minimize, and now he can always graduate the account. But when it was time to make the money, you got it within a week. And it's a great story for him. I'm proud of him that he didn't walk away and didn't be like, oh, so-and-so said such and such, I'm just not going to go to the Zoom meeting. No. He's always there. Always. You got to be there. It's a benefit, right?
Hey, Todd, do you mind glancing at EC, please?
Yeah, I will. I wanted to hit this GA real fast. For this God's plan trade this Lynn is talking about. So I think this is the 400 and some pip move.
Yep.
You know, we're getting signs of a pullback here.
What do you mean by God's plan? I'm trying to figure that out.
Thank you, Tony. So basically, on my YouTube, there's a strategy that I call God's plan. But all it is, right, is if you see a candle, and I'm gonna go back to the weekly so we can see it. This weekly candle has moved 400 pips, over 400 pips, right? From wick to wick. In 1 week, price move up 476 pips, right? You see that? So if we understand how price is supposed to move, this next candle that opens up, it's going to open here. The wick of that candle needs to come make contact with the wick of this candle. You understand that, Tony?
Yes.
So what we're saying here is by virtue of price action, we should be able to get a 100 pip move, right? If it goes to the zone, it's 150 pips. And, you know, in those videos, if you look on the YouTube page, I've shown how to make 10% in a 100 pip move. Here's 154 pips just to the zone. And now if it goes all the way to this wick, you're getting probably 300 pips move, right? So God's plan basically says that when this candle opens up and sells down, if you have your 100 pip stop loss from that open, right? Have you ever had 100 pip stop loss, Tony?
Oh.
Hmm?
No, I haven't had 100 stop loss.
Does it sound crazy?
Not with a low lot size.
Hey,
so 100 pip stop loss, if price comes to the 78, is going to give you 3%. Doesn't matter your lot size, but it's a 3% trade. If price goes to the 61, it's a 2% trade. If price goes to the 50, it's a 1.5% trade. So once you get into the trade, right? My argument is once you get into the trade and it pushes your direction, you might get a bearish 4-hour order block and you can put another entry without 100 pip stop loss. Maybe that entry has a 20 pip stop loss. Maybe you can drop to the 15-minute and get an 8 pip stop loss. But you can never make money if you're not in the move, right? So this trade is just to trade back to the discounted level. The move is still going to go up. Like the overall move, the direction of the market is up, right? So we can't lose sight of the fact that that move is a counter trend move. So when we take this move, we want to be sure that the move is going our direction. So we got the bearish order block, right? It closed just below our moving average. The next candle pushed up into the order block and it rejected a little. So on this next 4-hour candle, we want to see that it's bearish. Then I would suggest that you get in this move to sell it down. Does that make sense?
Yes, it does. Thank you.
No problem.
That could be a beast of a trade.
They
Well, they all can, you know, honestly. It's just how we approach it, man. That's it. It's all our individual approach. We all have our own entry methods. But as long as we all see the same thing, it keeps the group honest. You know, we know that there was an impulse move to push away. Now the pullback needs to fill the imbalance. On this 4-hour, I don't see any imbalance down here. So I need to drop to a chart that's going to show me what I need to see. It needs to be an imbalance or order block that sponsors the move. And when I drop to the 15-minute, there's a huge imbalance here. There's more imbalance here, right? It's been tapped into a little bit, but there's still from this wick to wick, this wick. Here's the 78 here. It all makes sense. If you look across here, right, here's relative equal lows. So there's ample reason that we can tell ourselves that price needs to come down here. Now we just have to wait for it to see that it's going to come down here. Yeah, I mean. Okay, what did you want to look at, Elfie?
I just wanted a quick explanation again as to what
Oh yeah, that's right.
risk off was, please.
Yeah. What did future say?
It means It means people don't want their money in risky assets. That's all it
Yeah, but
means.
you gotta let if they never see it, Sean, it's always gonna be.
Well, Elfie is a grown ass woman.
But Elfie's probably not the only one that doesn't know that. Okay. There's generally speaking, there's two environments, right? Risk on and risk off. So there are some go-to trades, right? There are some go-to trades when risk is introduced into the market. If it's
how do you introduce risk into the market?
Well, uncertainty.
How do you do how but what's the number one thing that happens that most people, financial people think is risky?
Well, I think it's multiple. I don't know the number one thing or what you're.
It's the raising of interest rates.
Well,
That's
too. So here's my argument against that. It is the raising of interest rates. I think if we're talking in a vacuum, but
that's the number one ingredient though. And I mean, people need to understand this because this is where I'm coming from with this. The reason that's the number one ingredient is because when interest rates are at zero, and you have to understand in the American economy, what makes everything go is people spending and borrowing money. When rates are at zero or low, I am going to take the risk to borrow the money and to spend the money because the interest that I got to pay back is low. When you raise interest rates, and I know that historically the market returns 7%, when you raise interest rates to 3%, 4%, now you're cutting into my profit. I don't want to take the risk because I only got a 2 or 3% window to make the money. And if things go wrong, now I'm at a loss. So that's why the raising of interest rates is the number one. Say again?
Stop right there. Does everybody understand the window? What he means by it's only a 2% window to make money. This is the time we got to ask questions, guys, because this is important for your understanding.
I don't.
Okay, I know it's
Yeah, I don't either.
When did you say 2%?
So Sean, go back and explain when interest rates are at zero, you're going to make 7%. And why do you use 7%? Right? It's they generally use the S&P yearly average, right?
Right.
Okay, so you got to explain it from like you're talking to a 2-year-old.
Yes.
Okay. So as I'm talking, if people don't understand something, you have to interrupt me and let me know that I need to try to find an alternate way or better way to explain what I'm trying to explain. Okay. So if I borrow $100 from you, Elfie, and you don't make me pay interest on the loan that you made, then I just got to pay you back $100, right? So
that's what it means when the interest rates are zero.
Right. Right. So, but if you tell me, Sean, I'm going to loan you this $100, but you got to pay me 7% interest on it. So that means I got to pay you back $107. But let's say I want to borrow that money and I want to go invest it or gamble it, whatever, put it in something that's going to bring me a return. And historically, the vehicle or instrument that I'm going to go put your $100 in to try to generate a rate of return, historically, that instrument returns 7%.
Which is the S&P 500. He's going to drop your money in that indice for a whole year. And it's going to give him 7%.
Right. Okay. So if the averages, the historical data says that I'm going to make 7% on this money, if Elfie's charging me 4% or 5%, I may not want to borrow the money because if historically I only make 7 and I gotta, it's written in stone that I gotta pay Elfie 4 or 5% back on the loan. That means if I'm right, then I'm only going to make 2%. So that is a risky bet, or that's a risky, I don't want to borrow that money. That's taking on too much risk. Because what if the market doesn't return 7% this year?
You still got to pay.
Now I'm losing because I got to pay Elfie back, right?
Exactly.
So does everyone understand that?
I get that.
Who does not understand that?
Makes sense.
Right. So that's a dumbed down version of what goes on in the American economy. When the Fed sets the interest rates at 0 or low, people run out and they borrow millions of dollars and they go invest that money in the market because the market historically returns 7%.
And wait. When there's 0 interest, it's going to return a higher rate than that, right? I mean,
I'm getting to that. Yeah,
okay.
Yes, it is going to return a higher rate because if you understand that, all of these people go to the same schools, they learn the same stuff. So the reason it's going to return a higher rate is because everybody's going to go out and borrow millions of dollars and plow it into the market. So instead of return at 7%, it's going to return, I don't know, 10 or 15% most likely, maybe higher.
Wait, because everybody's doing it?
Yes.
So what was the interest rates after the pandemic? 0, right, Elfie?
Mm-hmm.
Look at that chart. Look at that chart that he has up.
This is the pandemic.
Okay.
So if you had borrowed $100,000 from everybody could have did it from their 401k, right? Every American could have went and taken out $100K from their 401k. So if you had taken,
assuming they had it. Huh? Assuming they had the money, but go ahead.
Well, yeah. But let's just say you had a 401k and it had $100,000 in it, and you took it all out, and you came over here and you said, okay, I'm gonna put it all on the S&P 500. The S&P 500 went from 2,500 to 4,700. So it went up, it doubled. It doubled. So your return would have been over 100%. Really, it would have been more than that, but you would have doubled your 100K. So you could have taken that 100K that you made, put your 100K back in your 401k, and you would have had 100K in your checking account, minus the taxes. You understand that? That's why Sean is saying that he would borrow your $100 because he could have more than doubled it in that 1 year run, right? Or 2 year run, whatever it is, from 2000 and from May 2020 to February 2022, he could have doubled that money. And if you would use a 0.01 lot size, you would have made double your money. But if you would use a lot higher lot size that you could have used with 100K, we don't know what type of money that is. So does everybody understand that?
Yes, I get that.
So if we all understand what we're really talking about when we talk about the Fed setting interest rates and raising rates, and you understand what drives all of these Western economies, is borrowing money, spending money, then you understand why those interest rates are so important. And when people say stuff like, oh, it's risk on or it's risk off, when it's risk on, they think that rates are not going to be raised anymore, or that rates will be lowered. If rates are going to be lowered, I want to run out and buy whatever, whether it be a house, whether I want to borrow money, whatever, because I don't have to pay that much in interest. It's cheaper. So I'm willing to risk whatever. When rates are going up, I don't want to borrow money. I don't want to buy anything on credit, et cetera, because I got to pay more. So that's why these markets move the way they do. If he backs this chart up all the way back to 2008, 2009, in the Great Recession, you know, that's really when they dropped the rates to zero, and you see
Right here.
the shit just went straight up. I mean, this is probably the third or fourth time over the course of the last, I don't know, 2 or 3 years that we've been doing this, that I've brought this up, and I keep bringing it up because I think people still don't get it.
Right. So, but now that we're in risk, what did you say, off? That
Right.
means people want to put their money in JPYs, right? Or
So,
SHIB?
yes, I mean, and when we talk about the JPYs, I think we sometimes confuse people, but people rush to the JPYs. They basically buy the yen or they buy the chef when bad things are going on, when Evergrande is imploding and defaulting. You know, when anything bad's happening, when there's a war, you know, whenever there's uncertainty or bad stuff, people sell like the dollar, they sell most of the currencies, and they buy the yen and the chef.
You see, right here.
And that's also like, because the JPYs are all quote pairs, that's why they're heavier and that's why they're selling.
Right. Exactly.
Right, because all those
JPY is actually getting strong.
are really selling. So we say that JPYs are selling, but really it's the dollar, it's the pound, it's whatever's on the front. The JPYs are buying. And that's why, you know, I don't really like how we refer to the JPYs, especially in a new group, because it's confusing, because it's the opposite of what's really going on.
And Leandra, you have your terminology flipped.
Is it?
Yeah.
So what's the soft landing means?
Soft landing means you're gonna keep your money in the riskier assets. That means that nothing, you don't have risk to worry about. It's a soft landing or no landing.
You're not gonna have a recession or a
You ain't
depression.
worried about it. You're gonna keep buying.
You risk off or risk on?
Risk on. That means you can put your money on the riskier assets.
So let's talk a little bit about what a risky asset is.
Wait,
you may not say again.
I want to back up, because the reason why I whenever you ask me, the number one thing for risk is, what I was trying to get at was, in this particular environment, you know, even though they raised interest rate 12 straight times, right, or whatever, they were still buying the market. That's why I kind of had some pushback about this being the number one thing. You know what I'm saying?
Well, it is the number one thing, and I'm going to tell you why they bought it.
All right, go ahead.
They started
with they, and what is it?
Investors. I mean, whoever
hedge
the
funds
investors.
Yeah.
Why were the US 30 and the NASDAQ and the S&P, your German DAX, all this stuff has been going up the last, I don't know,
right
what,
here.
3 months?
6 months. 6 months.
Really? 6 months.
Right.
7, 8, 9,
So
10 months. 10 months.
So
I thought they said, the whole point, they thought they were gonna cut off the interest rate, stop cutting it off. That's why.
You're exactly right. That's why they were buying it.
Soft landing.
Yeah. They were, what the Fed came out and said early in the game was, hey, we're going to raise the 5% or whatever the number was.
And
as
hold.
Say again. Yeah, and hold. So as we approached that threshold that they had initially said, you know, people started buying, because, hey, they're not going to continue to raise. That was the popular thought process. So
there was also a couple of clouds that were saying that they were going to cut early next year.
Well, right. That's what they're projecting. But the larger point is, they weren't going to raise them anymore. So that's why it became more of a risk on environment.
Okay,
But now
just
oh, go ahead, go ahead.
I just want to make sure I understand. So when it's saying risk on, that means we can take the risk.
Yes, that means we're buying
But
Money
the British
cheaper.
pound. Yeah,
look, you
And
gotta
risk
let me
off
explain.
Sorry.
You have to let me explain. I'm not yelling at you, Elfie. I'm yelling at my brother. You know, you gotta let me explain what is considered risk. You know.
Go ahead, go ahead.
All right. So to the masses out there, the investors, technology is primarily what they consider a risky investment. And that's primarily going to be the NASDAQ and the S&P. That's where most of your tech companies are. So in a risk-on environment, and if you look at that chart that he has up there, that monthly chart, and you see it going up in a risk-on environment, all the technology and shit is going to be bought. In a risk-off environment, it's going to sell. You understand that, Elfie?
Yeah, I think so. Mm-hmm.
Right. I mean, this is important that everybody understands this, because, you know, with the Evergrande thing stuff out there, you know, people don't want to take the risk. So this stuff is it's gonna sell. And once you start understanding the real world fundamentals, you start to think that it's manipulated, because this stuff has been buying up all this time. And as soon as it approaches the 78, here's the Evergrande story to induce a sell. You know how sometimes we say, I don't know what the catalyst is going to be. The chart says it should do this, but I don't know what the catalyst is going to be to make it do it. This is a good example of that.
Well, look at Bitcoin. Look at this chart.
Yep. Bitcoin is technology, right?
Right.
So look, it went up. We broke this high right here. We made relative equal highs. All of a sudden we going down. Look where the fair value gap is, and look where the 78 is.
Mm-hmm.
So, but I thought this Evergrande you're talking about, isn't this real estate?
It is healthy, but
such a big company that it causes fear.
Okay.
China's economy is in shambles. It's fear, uncertainty. We have a global economy now, not just individual economies. So people are scared of the shock waves.
I mean, Elfie, I know you don't live in America, but if you go to a mall and you're on one side of the mall and somebody's on the other side and they start shooting people, everybody in that motherfucker's running. You know, I mean, you know what I mean? Because the fear, you know, the panic, the fear, you know, everybody's selling out of there, you know, for lack of a better term. They're getting out, getting the hell out of Dodge. The gunman ain't thinking about you. He can't see you. He's on a totally different floor on the opposite side of the mall, but everybody's hauling ass up out that mall, you know. That's how you gotta look at fear in these markets.
Okay.
Emphasize the lack of a better word, right? It's the money, right? We're trying to make the money. These people have the money, right? And they're gonna get the hell out of there, right? It's
With
almost
their
like
money.
it's almost like a rug pull, right? They're all pulling their money out, and it creates a snowball effect, right? But the retail traders and all that, they don't know nothing. That's why they become liquidity, because they don't know the big picture, right? So when money comes out of all these assets, the price is going to drop.
Like this.
It's going to keep dropping, right? But when you understand how this works, you will move as it moves, right? So you take your money out because now you're in the know. That's smart money concepts. So we're supposed to be taking the money out at the top and putting it back in at the bottom. That's the game.
Exactly.
And in this case, taking out just means click the red button, the sell button. instead of the blue and the buy.
Right. See, everybody else thinks, oh, they sold something. No, a sell in our game, there's two different versions of sell, right? We're selling the market and that's the thing about talking to investors and then trading. I think they have a different version of trading that is not what we're doing, that they think we're doing, because that's all they know. Right? Like, no. This is not the same trading. I don't know what they do, but it's not what we do. But I'm saying that to say, when you become a part of the people who know what they're doing, now you're in the place of, what do you want to call it? Whoever moves liquidity. That means they have a lot of capital in the game and they can move it all at the same time. This is a version. That's not the only reason why things move, but that's a big reason why. And when you can move the way they move, you're already in line. And all these techniques and concepts that we're all figuring out and having aha moments about, they already know all this stuff, right? But they know it and are accountable and responsible. They can lose their job if they don't do it correctly, right? And it's very lucrative, right? That's what we're tapping into. So keep at it. Do not let this go. You get on this, man. It's going to take you to the next level. I'm on my way, and there's plenty of people here who are, and we're going to keep it pushing.
And one last thing before Sean continues is all of us to a person should have a go-to move when these things happen, right? So when I saw that China news report, I knew that the JPYs would sell, right? I knew Bitcoin, the markets already said they were selling, but I don't trade Bitcoin normally, but I knew it was going to sell. So you have to have an understanding, like, man, the JPYs are going to cook. Hey, this is going to happen, right? Like you have to have an understanding of what to look for, what pair to go put your money in. Does that make sense?
Yes, I'm getting there.
All right.
I mean, it makes sense, but I'm saying like for me to do the correlations when I actually do hear any kind of news.
So let me ask you a question. Do you write this stuff down? Do you have a notebook that you can, hey man, risk on?
Yes, I just.
Okay, that's very important because nobody expects anybody on the call to memorize all the information. But every individual has to take notes, right? Or mark on your chart or on your wall, just like we talked about Wyckoff. Wyckoff is something that you're just not going to remember, right? Unless you start seeing it and you paying attention to it over and over. It's something that you pick up over time. But if you just write the stuff down or print out the charts, you don't have to even know what those labels mean. You don't have to know what an AR is, a SOW. You don't have to know any of that. You just say, okay, well, this look like Wyckoff on my chart. And if you can recognize the spring, right, and then you see it go up and break the highs, you know you're expecting a pullback, right, where you can get in for the buy. If you have an understanding of what we're talking about, you don't have to have an intimate knowledge of, but you have a basic understanding, then you can catch moves based off of what you see on the chart.
Mm-hmm.
All right, go ahead, Sean.
All right. Well, I don't have, too much more to say. I mean, there's just some basic building blocks that my hope is that everybody at least gains a rudimentary understanding of. When you hear certain terms, your antenna should go up. When you hear risk on, risk off, your antenna should go up. But the second order effect of that is, well, which index is best for what are we talking about? When we're talking about risk, we're talking about the NASDAQ primarily. We're talking about the S&P primarily. The US 30 has less techie stuff, but it is an index, and the indexes generally move together. So that one, if the others are selling, it's probably going to sell too. If the others are buying, it's probably going to buy too. But your primary, when you hear risk on, risk off, you should think NASDAQ index, S&P index, and you should think about the JPYs. Because if we're in a risk-off environment, the JPYs are probably going to go up. If we're in a risk-on environment or risk-off environment, they're going to go down most likely. And then if you understand how, on a basic level, what drives the economies, meaning borrowing money, then you understand why everybody hangs on Jerome Powell's interest rate, FOMC and all this shit that he talks about interest rates and inflation. So once you string together, a basic understanding of why that stuff is important and what it means, then, you don't have to memorize so much because things logically begin to fall in place.
Hey, I love that. I love that part right there. I don't have to write anything down. It's all mental notes and forward testing. Like, and as the forward tests are graduating, it's so beautiful. Like, I've been tracking it and the fruits of tracking it, bro. Like, I love when you explain stuff. You got to keep doing that because it's necessary. It may be flying over people's heads, but hey, it's all good. They have to graduate. So you got to keep talking about that stuff, man. You're really solid on that.
Appreciate it, man.
Thank you, Sean.
You're welcome.
Might not have been the last time.
Yes, thank you. You explained it very well. I understand a lot more of it now too. Thank you.
You're welcome.
Anybody else have any questions?
Yeah, Angie wanted to go over GC. I think, right?
EC.
Oh my God. Did you make money on EC, Angie?
I'm stuck in a hedge.
Well, I mean, you picked the wrong trade. Do you believe it's going up?
I do.
Me too. So what's your question? What's your question, girl?
I guess I don't have a question. I just wanted to know your thoughts on it. I do know it's going up though.
It is going to go up. It's just going to take some time. And with this Evergrande thing, it might pull back. You got imbalance here that didn't all of it didn't close. So you got about this much imbalance. But it is it's gonna go up. We can't control the time aspect of it. It did give you a bullish order block. I mean, it's a bullcrap bullish order block, but you got to take what you can get. You got a bullish order block, an indecision candle, and a bullish order block. So in actuality, it's probably more of a wedge that's forming here. But yeah, it's still bullish.
Thank you.
It looks like it's doing what GC did 2 weeks ago.
Yeah, it like OG says, it's wavy, baby. You saw the same thing out of GC, and then Selena got out of that trade, and as soon as she got out,
yeah, me too.
ran up. You got out of the trade. This is the same thing right here.
And
I'm still in GC.
I really wish. I thought you got out, Selena.
Nope.
Go, Selena.
Hey. I'm in my personal account, but I never took it in my prop account, but I'm definitely in it in my personal account. I'm gonna ride it. I'm still in UJ in my personal account, and I'm finna let this sale run wide open and add my positions and make me some money.
Mm-hmm.
Now, how you like?
I'll take a 3% finder's fee. Thanks. All right, do I have any other questions?
The news thing is I mean, it's like anything else. Like you're not good at it at first, and then you just stick around it, and it just happens to you hear the things over and over and over again, and it just starts adding up once you start hearing multiple sources saying the same thing. That's how it's happened for me because I'm not a news guy. I'm not politics at all. I can't stand it. But I started paying attention to more of what are the institutions doing. Like I'm starting to pay more attention to that, and the people that I follow. I'm posting videos everywhere and all through the threads, right? So I'm always posting something that somebody needs to hear, right? So if you don't know what to look for, start there. And then once you click on that video, and then it'll start branching you out to other things. And then you just find whatever it is that you want to hear. These are the specific things that I want to hear. So it takes me there. And then if something else pops up within the video, I can go check out something else. But I think I got a solid 4 to 5 different YouTube channels that I post throughout the week. And I do the crypto thing. And then, anything else, any type of news, I'll post those videos. So I do that for a reason, right? So if you don't have anything that you focus on that because that's what I'm focusing on. So, and then you can figure out what you need to do from there.
Can I have ask one more last question to Sean?
Sure,
Sean,
go
are you
ahead.
still here?
Yeah,
Yeah.
I am glad. You hear me?
Why is tech so risky? Maybe that's a stupid question. I don't know, but I just
No, it's not. It's not a stupid question. It's because I guess the best analogy or way I can explain it is look at what Elon Musk, that Sir Branson, Jeff Bezos, all these dudes are trying to go to Mars, or they got these rockets, right? And they're going to space, but sometimes the rockets blow up. Nobody's made it to Mars yet, So, Elfie, if I come to you, or you come to me because you got a bunch of money, and I'm the rocket scientist, and you invest in my project, what if I don't get there? What if I'm not a success?
Okay.
So you got to extrapolate that across all technology. Look at the internet. We started out with that dial-up shit way back in the day, and I don't know how old you are, or everybody in the group, but look at how the internet has progressed over the years. We went from the dial-up, the AOL crap, to I think it was called DSL. Then we got eventually to broadband, 3G, 4G, 5G. So basically what I'm saying is tech is not always, there's not always a straight line to success with tech. So it's risky. Tech in general will win. Somebody will perfect it, but we don't know which company is going to perfect it. We can't invest in every company, right?
Mm-hmm.
So it's generally viewed as a risky investment. Crypto is technology. Who's going to be the winners? Which tokens are going to be around in 5 years? We think Bitcoin and ETH are, but everybody that's winning right now is not going to be winning in 5 or 10 years. Where's Hotmail at? You remember them?
Yes.
They outlook now.
Where are they, Elfie?
Good question.
Right.
I saw Hotmail and MySpace hanging out yesterday.
Well, yeah, where's MySpace at? So, but there was a time when they were like the top players, right? So that's why tech is generally viewed as risky.
Yeah, it makes sense.
Elfie, did you have a Mahente page?
A what? MySpace, you mean?
No, Mahente.
Oh, what do you mean, man? What's that?
It's my people in Spanish.
I don't know about my people.
Hey. Oh my God.
Hey, what did Leandra put in the chat?
Okay, thank you, Sean.
Well,
No, I just added this. Is it because of the Taiwan like wars over the chips as well? Because all the chips are made in Taiwan for most of the technology stuff that's made, Apple
That's a-
product and stuff like that. And you know, China's got this like hovering over Taiwan at the moment because they want Taiwan, and then you know,
Hey,
the
Elton.
US is trying to protect Taiwan
yeah,
from
Hey,
China.
Leandra.
that's definitely part of it.
Leandra.
Yes.
Xi Jinping just texted me and told me to keep. Hey, let me tell you to keep his name out of the mouth.
But hey, Leandra, in all seriousness, I mean that is, yeah, that's a good point, because if in theory, if China gets control of Taiwan, they get control of all the chips. So they're going to advance technologically, a lot faster than we are, and the kind of I don't want to call it second and third order effects, but when you take national security out of the equation, the Apples, and all these tech companies that need those chips, they're going to lose money because they can't put out new products. So that's why Taiwan is very important.
And isn't Apple worth like trillions to the US economy as well?
Yep.
It's more than it's worth a lot.
Yeah, absolutely right.
Warren Buffett's invested, is it 85% of his portfolio in Apple?
I don't know how much it is, but it's a lot.
It's a lot, yeah.
And I saw your question about the billionaire that I was talking about that shorted the market. I don't know the guy's name, but I think I saw it on YouTube last Tuesday. I think I saw it. And then Wednesday I heard it again. So I just happened to look at those charts and I threw a fib on it, and it all lines up.
Rosebud said Michael Burry.
Say again?
Rosebud said Michael Burry.
That may be the guy's name. He's not a guy that I had ever heard of before,
Isn't
but
that the same guy that shorted in 2008?
what the Big Short guy, if that's the same
Yeah.
guy, whoever this
Yeah,
guy is the Big Short guy.
Yeah, it's the same guy, yeah.
Yeah, it's the same guy. So that's why I paid attention.
Well, everyone's going to be paying attention then, won't they?
Well, you have to. I mean, when you follow financial markets, really no than following your favorite sports team. Or for those of y'all that like all that gossip shit, with the Kardashians or whatever it is, how y'all follow certain people in that space. You have to find out who the key players are in the financial space. They say or do something, you may not agree, but you have to pay attention and go try to at least research it the best you can.
It's not even hard. It's right there. All we got to do is want to do it.
Yep.
Thank you, Sean.
You're welcome.
Yes, Sean, thank you.
You're welcome, Alpha.
I get it now. That makes sense.
You gonna continue doing this, or is it? Watu said, do y'all have any other questions or want to go over anything else?
Awesome meeting. Oh, while we're at, well, I guess we could discuss business afterwards.
Yeah, let's just stop the recording first, yes.
All right. He's going to stop it.